Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PRICESMART INC Annual Report. PriceSmart Inc. provides a wide range of businesses and services through its membership shopping warehouse clubs. The company's offerings include basic and private label merchandise, consumable and non-consumable products, under the members' selection brand food and bakery services, health services, plus optical services, plus audiology services, plus pharmacy services, e-commerce platform curbside pickup, and delivery services. The company also offers a variety of product categories, including groceries, electronics, large and small appliances, automotive products, hardware, sporting goods, seasonal products, clothing, home furnishing products. The significant increase in PriceSmart Inc.'s stock price by over 35.62% in the past year can be attributed to several key developments and positive financial indicators. A notable factor was the 8.6% dividend increase, signaling confidence in the company's financial health. Additionally, strong performance in fiscal year 2024, including an 11% sales growth, an improved return on assets (ROA) and return on equity (ROE), contributed to investor optimism. The surge in online sales by 21.1% in the first quarter of fiscal year 2025 further fueled expectations for expansion into new markets like Chile. The company's positive third-quarter results, showcasing 7.1% revenue growth and expanding profitability, led to a reaffirmation of buy ratings from analysts. PriceSmart's robust fiscal year 2025 performance, including total net merchandise sales of $5.2 billion and membership accounts growing by 6.2%, contributed to the yearly stock appreciation. The company's expansion plans, aiming to operate 59 clubs by 2026, also indicated a strong growth strategy. Overall, PriceSmart's consistent earnings and revenue growth, surpassing industry averages, have driven its stock price increase in the past year. Net income and profit margins overview. The net income of the company experienced fluctuations between 2024 and 2025. Despite a decrease in some periods, the overall trend showed an increase of 6.3% from $138.9 million to $147.9 million. This growth can be attributed to revenue expansion and effective cost management. Profit margins also underwent changes during this period. While total gross margins increased by 9%, merchandise gross profits as a percentage of net merchandise sales remained steady at 15.7%. Operating income rose by 7.2%, indicating improved operational efficiency. However, profit margins declined in some periods due to factors such as cost of goods sold, expenses, and competition. The effective tax rate decreased from 31.1% to 28.4%, contributing to the overall increase in net income. Various external factors like revenue growth, cost management, and tax optimization initiatives influenced these changes. The company is generating positive operating cash flow, as evident from the financial summaries. The data shows a steady increase in cash flows provided by operating activities, with a significant jump from $2.1 billion in 2024 to $2.3 billion in 2025. This upward trend indicates that the company has sufficient funds to support its operations and invest in long-term growth, solidifying its financial stability. The company's debt level has experienced fluctuations over the years. Initially, it decreased from $100.5 million to $59.7 million, page 25. However, this trend was reversed on page 49, where the debt increased by $33 million and net debt rose from $115.9 million to $148.9 million. Furthermore, on page 55, long-term debt with fixed interest rates decreased while variable interest rates increased. Regarding interest expenses, there have been mixed results. On page 37, interest expenses increased by plus 6.7% in 2025 compared to 2024. Conversely, on page 46, they decreased by $1,444, 11% decrease. Additionally, on page 79, interest expenses from external sources showed a significant decline, decreasing from $3,940 in 2022 to minus $4,310 in 2021 and minus $11,020 in 2020. The company's financial performance varied across different segments and regions in the recent period. Notably, the Caribbean and Latin America regions recorded significant growth, with revenue increasing by 44% and 51% respectively, accompanied by a substantial rise in operating income. In contrast, the U.S. market experienced a decline in both revenue and operating income, down 14% and 34% respectively. While no region was explicitly mentioned as performing poorly, small markets may be vulnerable to competition. Management's outlook on PriceSmart Inc. as strategy. The management of PriceSmart Inc. is focused on maintaining a strong financial position and expanding its operations in the warehouse club industry. The company's financial statements reflect its commitment to prudent financial management and strategic growth. However, without specific questions or topics provided, it is difficult to discern any notable changes or shifts in the company's outlook or strategy. Management appears to be prioritizing stability and continuity, as evident from the comprehensive financial summary. While this suggests a cautious approach, it also implies that the company is well-positioned for future growth and development. Further analysis would be necessary to determine specific areas of focus or potential changes in direction. The company's financial summary reveals a commitment to shareholder value creation through two key initiatives: dividend payments and share buybacks. Specifically, it is confirmed that the company has paid dividends, as stated on page 30, and also engaged in share buyback activities, as noted on page 31. These actions demonstrate the company's focus on rewarding shareholders, while also potentially enhancing their equity stake. Concerns about inventory buildup and supply chain disruption. The company faces several challenges in its inventory management and supply chain operations. One of the primary concerns is inventory spoilage due to extended power outages, which can result in losses for fresh and frozen food products. Additionally, disruptions in the supply of products, increases in procurement costs, and delays in deliveries can also impact the company's operations. Furthermore, transportation companies' inability or failure to provide services, as well as disruptions to shipping prices or terms, regulations, or importation of products, can cause interruptions in distribution center operations. The company is also concerned about excessive amounts of slow-moving inventory due to changing consumer preferences. The COVID-19 pandemic has already caused market and supply chain disruptions, resulting in substantial inventory markdowns on certain non-food product categories. Shipping and freight rates increased dramatically during the pandemic, which could reoccur in the future. Delays in importation clearance due to disputes with customs and tax authorities can also impact imports into Nicaragua and other jurisdictions. Lastly, U.S. dollar illiquidity in certain markets may impact the company's ability to convert local currencies into U.S. dollars for imported products. These concerns suggest that there are potential issues with inventory buildup or supply chain disruption that could impact the company's operations and financial performance. That concludes the financial summary for PRICESMART INC. Feel free to comment below, and I will be happy to answer them when possible.